Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart. And as you can see, it seems like these AI tokens are pumping today as Bitcoin is getting a little bit of a bounce. Let's just head straight over to the charts. We can see, of course, our weekly chart where we do note that every time Bitcoin is above the Bollinger Band's midline on the weekly there, we are in a bull market, bull market, bull market. Bull market, bull market. Of course, there can be little fake outs, but when we really get under the Bollinger Band midline is when we enter a bear market, bear market, bear market, huge bear market. And the question is, are we getting embedded underneath that Bollinger Band midline? And essentially, do we have a fake out going on here, or are we entering a new phase of a bear market? And that's to be determined. So guys, let me just clean up the charts really quick and we will go over the key levels that we have to watch out for in order to get out of that bear market risk. Of course, if we just go by the Bollinger Band's midline there, it would be that number that I've been mentioning for a few months now, which is approximately 28,000. We did get a pretty hard rejection off of that in our last attempt to recapture it. But 28,000 is still our line in the sand. And of course, if you want a confirmation, and not just a validation of that thesis, but a confirmation of it, then you'd be looking more towards 29,000. And that would be a pretty safe area to consider. Of course, you always have to remember that we could break down again, and that could just be, again, just a fake out on the top side. We could get a fake out on the bottom side and a fake out on the top side. And that's how sometimes market makers shake up this market. But guys, you pretty much are familiar with that theory. I've been presenting it for months. In fact, other channels are now copying this kind of outlook and this line in the sand that I've been presenting on a daily basis on their shows now on a daily basis. And I find that kind of flattering. It means that we are doing it the right way. So guys, if you are paying attention to these lessons, then you are absolutely killing it. Now let's go over to the monthly chart. And we need to get a monthly update because, of course, we did enter September. And let's just go back to July and take a look at where our key levels were just for some perspective. And here you can see that our 3-month volatility pivot was up at 31,400. And that was just too tough of a nut to crack. Of course, we had all of this resistance over here and here from the previous bull market. And so it wasn't likely that we were going to push through on that first try, but it was a noble first try. The question is, can we crack through that on a second try? Should we be able to make a nice swing back up there, maybe make a giant cup and handle, or would it take maybe a couple more, tries over a period of maybe 6 months, even a year, right, until maybe after the halving on Bitcoin? Well, guys, of course, this is outdated, and back then we did have a monthly volatility pivot all the way down around 18,000, which suggested that there was a high likelihood that if we didn't break that 3-month volatility pivot and then capture that as our bias to the upside, capture the pool, capture the pivot, that we could find ourselves plummeting all the way down to 18,000. And currently, it looks like that's the trajectory that we ended up taking. We did fill out the pool, and then we are getting embedded underneath it there. Of course, fast forward to August, and August basically had the same setup, except because we lost that volatility pivot and started to push through the pool. Basically, we accelerated to the downside. We lost our general continuation line, and now we're threatening that big alpha energy, which is essentially the intensity of our move to the upside, could be lost. And where it would be lost at is also where the new 3-month volatility pivot was placed last month, which is approximately in that 23,000. And we also had the monthly volatility pivot rise up to the $22,000 area. So that whole region was looking like a good place for maybe a flash wick or some type of test there, as there were pretty significant pivots in that area. And that's how market makers like to work. They like to just kind of flash down to these pivots, maybe flirt just underneath them and then hang on to it and then push back up, because that way they liquidate both the shorts and the longs, even on these macro charts, guys. So let's go ahead and just come to our current levels, because of course the new month just kicked off and we want to see what what's going on here. As you can see, these pivots really didn't change that much from August. So we still have the 6-month pivot up here as kind of our stretch goal down the line to at least come up to this $43,000 area, maybe $38,000 and some change, in my opinion. At least we want to take a look at this wick and this closed candle up here, and then see where we can go from there. But right now we're just hanging out at the bottom of the momentum pool for September. And should we lose it, and we are just a hair below it at the current moment, then we could easily check down to that alpha energy level, or we could even flash down to this 3-month or maybe even the monthly volatility pivots down here in that $21,000 to $24,000 region. So this whole area here probably is going to be a little bit of a buffer. And if I throw on some EMAs, I'm pretty sure, yeah, you can see everything is just kind of concentrating in this area. And if we don't hold it, it could be a long way down before we get any significant, support there. Now, do I have all my EMAs on? No, let me just throw them all on to see if I can catch any more information. And no, they're all bundled up here in our current pool. So it really is the case that we do have to hold on to this pool, or we could easily just lose all of our EMAs, and we don't have any good support until down here at our lows, at least on an EMA basis on the monthly. And you know could we pivot around this this 3-month and the monthly here? Yeah, we do have support in this area. And could that give EMAs time to kind of catch up with us? And do we have to fall all the way down to our lows? Well, no, we don't have to fall all the way down there. But if we did, I'm not really sure that the 100 on the monthly is necessarily going to catch us. We don't really have back data for that. In the past, the 50 on the monthly has been a good bounce spot. You can see, even though during COVID we did bounce through that, ultimately we did candle close above it, and same thing at the bottom of 2019. So, is the 89 and the 100 kind of our new, bottom there? And could we flash all the way back down to our cycle lows here? Perhaps that's in the cards, but for right now, I really am looking at those low 20s areas should we lose this pool. Now, we don't want to just assume that we're going to lose it, even though that does seem to be the narrative. We do have a lot of liquidity up here that we could retest, and that could actually pump us up into the top of the momentum pool, where we would add momentum to the upside should we cross 27,217. So 27,000 is a good first number for us to be eyeballing there. Do we cross above 27,000? Let's just say 250, 27,250. And then if you want to be more secure, we're going to look at that neutral point of control, which happens to be the Bollinger Band's midline on the monthly, somewhere around 28,000. So both the weekly and the monthly are saying 28,000. You need to catch 28,000. That will also put us on top of all of these EMAs, which then would have the potential to squeeze us up to potentially even that $30,000 to $40,000 area. And so this area, even though it looks quite small in the grand scheme of things, this is that concentration point where if we do get a squeeze up, it could be a huge squeeze to the upside. And if we get a squeeze down, it could be a huge squeeze to the downside. So really pay attention to what goes on in the next probably month or two, because this could essentially determine our fortunes in this market. And guys, again, the 50 has been bouncy in the past. So, we can't put it past us that we could just get a bounce and we would be above the monthly pivot, we'd be above the monthly pool, and our bias would be to the upside in that case. All right. Of course, currently we are below that pool. And as long as we're below that pool, I'm looking to check back to that monthly pivot and maybe get a little bit of a slowdown in momentum here. Hopefully we don't just, flash all the way down to the bearish control zone, which currently lies at 12,000. So guys, if you're looking for $10,000 or the $10,000 range, it is possible. We are under the neutral point of control. under the alpha momentum pool there, and if we lose that monthly pivot, there's nothing to really stop us from actually touching back to the bearish control zone and just getting a nice, basically monthly backfill plus monthly test to the bearish control zone on the monthly RSI. And that could happen before maybe a major push being really oversold. And then maybe these big institutional buyers like BlackRock come in, and that could be the catalyst for the next bull run, having basically touched a high value area. Now, we don't tend to just, hard stop at a certain line. So could we get a little dip lower than that? Yeah. So I would be looking to that 10,000 should we actually end up breaking this barrier over here. But currently, again, we're just playing around in this area. And since we are essentially at $26,000, approximately, 27,000 is not really that difficult to shoot for. It can be possible, especially since we have this liquidity up here. That would be a very reasonable target for a bounce. And should we catch support there, again, we could just really continue to 28, and you have to be able to look at both directions in this market. Okay, I think I've spent too much time on the monthly there. It's a lot of speculation, but it's a huge amount of time, so you might as well prepare yourself conceptually for that. If we do drop down to the daily, then we can go over a couple of these daily pools that we did look at in the past on this channel. And here we can just go back a couple days ago where we were pumping up here, and I was telling you to take your profit approximately at that $28,000 level where we were highly likely to be rejected at, and that the pool for the daily, extended all the way down to 25.5. Look at this, Alpha Found. We actually went all the way down to 25, 300, and then where did we start hanging out? Above that 25,500. So, guys, if you have been playing these alpha momentum pools, you guys are absolutely killing it. And if you want a little bit more instruction on how to use these pools, please do visit the Discord. And of course, the description to our group discussion is in the link in the description of the video below. And if you did take that trade, it was a nice 7% move to the downside. If we are to look at the next daily update that we did have there, of course, it was a very thin pool, and our price action did end up stalling in that pool. So that was also dead accurate. And, it did suggest that if we got embedded underneath the pool, that maybe we would continue to fall. If we rose above that pool, maybe we would get a pop up as much as to 27,000. But you can see that we're just swimming around in the pool, which is really neutral territory. And so it's, nothing really going on, just a little bit of sideways action, sort of like these candles over here. Of course, we do want to look to see, are we going to recover some of these levels or not? Are we going to have a bigger dip, or are we going to go for this liquidity mass on that drop candle? Well, if you wanted this update, you did have to join the group. Again, the link is in the description of the video below. And if you would like to take a look at our current update for the daily, I will present it in this video. So here you go. It does look like that we do have the possibility to lose our hold level at 25,868, which we are currently just a hair above. But should we dip back down there and maybe put in a couple 4-hour candles, we could find ourselves, being really tested at that general continuation level, which is basically the MACD on the daily, and that's the 25,816. And should the MACD on the daily flip bearish, then I would expect us to really come down here to approximately 25,625, maybe stick our toe underneath there and hopefully just pop back up for another attempt, sort of like what we did over here, just kind of chop city, right, for a couple weeks. Where we get out of this mess is above 25,980. So here's 26,000 essentially. That would get us out of the bearish control zone. It would also set up a squeeze on the 6-hour, and that could lead into a higher daily squeeze, which might be limited by the 21, taking out that liquidity here, sort of like this pop that we got over here. And that would be the mean reversion play that I would want to see set up. Currently, we're not there yet, so I do expect this to take more time. But if we do throw on those EMAs, you can see that we're under the 4, under the 9, under the 21, and that's bearish, bearish, bearish. So there is a greater likelihood, especially being in the bearish control zone, that we do retest our lows. But of course, we can't be biased on that. If we're putting a couple 4-hour candles above this momentum pool on the daily, then maybe we do try for a little bit of a pop-up, just kind of test that bearish control zone and see if we can build up some type of a divergence to get us out of here. But currently we're just mostly going sideways. If we do take a look at our old 6-hour chart, then you can see a very similar thing here. We were looking to see if we could get a pop-up at the bottom. Now, this one was just presented in the Discord alone. So again, it's a benefit of joining the group. You get these Discords. And after we had that daily crash to 25.5, which almost hit it, to the dollar accuracy there, then I put up this 6-hour pool, which suggested that we might be able to make our way all the way up to 26,300-ish. And currently, we have just been popping up. So again, like a couple people in the Discord are taking this play, and currently we are up. There was a solid 2% there, 1.7 currently, but it looks like we are attempting to make this move. And will we have some check back on the daily before we try again? Maybe, but we can give an update to this pool. So if you didn't catch the bottom, you want to just use a fresh pool. You don't want to go with the old pool. And you can see that we're just entering a much more slender 6-hour pool here in our current orientation, which has 3.5 hours left. And this one would suggest that we could pop all the way up to 25,990-ish before we end up having perhaps some pressure from the daily to push back, perhaps that volatility pivot at 25,715. Now, mastering these levels is very important. A lot of people, they just said, oh, there's liquidity up here, I'm going to put a short order up here. Oh, there's liquidity down here, I'm going to put a buy order down there. They have no idea if a price action will ever work its way into that area for maybe even the next 3 years or whatever. But I'm trying to give you levels that you can work with on the time scale that's actually on the chart. And as you can see, if you're using the 6-hour chart, then maybe you're trading on the 15-minute or 1 hour, something like that. You could even trade on the 5-minute. If you're using the daily, then maybe you're trading, on the 6-hour, 4-hour, or the 1 hour perhaps. And so, guys, this is how you can trade every single day without just, wishful thinking that at some point we're going to take out this, or at some point we're going to take out this wick. Those kind of smart money concepts, those things do work, and they probably work with, extraordinary profitability if you have the time to just wait and if you have everything set up in order. But the benefit of the system that I'm presenting is that, again, we have our pools, and if we met the condition to break out of the pool and then we come back into the pool, then we know that we can take a long into the pool. If we break down into the pool, then we know that we can take a short, like immediately, right? Immediately. And very high hit rate. So again, if you want a deeper explanation of that, please join the group. It is in the description of the video below. Guys, I think I'm going to end it there and just kind of show you how we are getting a little bit of this squeeze setup possibility here on the 6-hour, and this was a very lovely one over here where we did get a nice pop. It just wasn't quite ready to do the full move, came back down. And so if we take a look at this, it was something like this, a little bit more chop. And then when everyone was bored to death, then it suddenly went. Are we going to do something similar where we've fallen down, got a little bit of bump here, maybe we get a little bit of a surprise drop here, maybe try for some type of a pop, right? Fail ultimately to get anywhere, and then do a little bit of a grind before we have trying to take out this level again. Maybe we succeed at it, or maybe we just fail, and that's when we drop to heck, guys. Well, of course, I'll keep you updated on that, but for now, those are your key levels. Those are alpha for the day. Stay safe and happy trading.